5 questions you always wanted to ask your financial advisor. Answered. It's fair to ask your financial advisor if you invest the same way that you tell him to. This is an article by Hal Brunbrick a couple of years ago. His answers may indicate whether you need the advice of someone else. In other words, you may want to look at that. During a meeting with a financial advisor, it's common for the financial advisor to make some of the questions. Have anything changed since the last met? Are you comfortable with the investing process? You know, the financial advisor, if you want to look at that, you can go to moneyusnews.com. Here are 5 questions you've always wanted to ask your financial advisor and probably should. For example, how many clients did they have? Typical financial advisor has 156 households like 2-3 years ago. Now it's probably average. The average advisor has 165 households just 2 years earlier. Part of the trend in reducing a financial advisor's book of business comes at the expense of less affluent accounts. In other words, they were reducing back then because they didn't have a whole lot of affluent accounts. That number decreased to 35% in 2013. Basically, 44% of the clients on an advisor's books had less than $100,000 in assets. Accounts under $100,000 are frequently transferred to a rookie advisor or firm's call center. In other words, they go to somebody else. Bureau of Labor Statistics reports the median annual wage for financial advisors is $67,500. So, yeah, the lowest 10% earn less than $32,000. Top 10% earn over $187,000. So obviously, the more they earn, the more they're going to want their clients to have in assets, so they can invest more, make more money, and so forth. So, how much money do you make? Okay, that's that question. But look, we say, all right, so the part of that trend is saying, okay, the financial advisor, the more money they make, the more they want to make, the better the clients. How do I get new clients? Or how do you get new clients? It's another question you might want to ask the financial advisor. Financial advisors say most of their clients are obtained through referrals. And in a perfect world, that would be a good case. That would be a case. But there's often invitations you receive in the mail, free dinner, informational meeting, that sort of thing. Basically, a referral can mean not just a referral. The primary revenue growth for an advisor, accounting for only 6% of the increase, comes from existence. In other words, most of their existing clients are what account for the revenue growth. How do you make money off my account? Perhaps the hardest question to get an answer to. If I just say they are fee-based or fee-only, which sounds similar, but it's really not. So if you look at the Guide to a Financial Fee Structure, you can sit there and say, okay, how is this advisor paid for helping me? It's essential. That answer is essential for choosing your advisor, because realistically, how do they get paid? If you want to understand that, because that basically impacts your money and your growth. It'd be awkward to get into that question, fees and commissions and so forth. Basically, you have a certified financial planner, a member of the National Association of Personal Financial Advisors, a CPA, PFS, many certified public accountants, go into the financial personal finance services and so forth, personal financial specialist. It just depends on what exactly you're wanting and how much you want to delve into the actual financial planning world. Basically, it's a way of their accountability toward their client. One takes an oath, the other one has to do with certain things that they have questions that they are asked and so forth. They're paid by any of these 3 modes. They often are trained in financial education and certified in financial advisory skills. But there's always a distinction between the CFP and the CPA and so forth and all of those sort of things, because they're not as stringently required to do certain things. They actually result in a real-world difference. What fee structure is compatible with your goal? Of course, you want to think about your goals and your plan that you've made up and so forth. Some of them require that you have a large portfolio. Some have a minimum threshold of $500,000. Some will take on the little guy, as it were. And of course, oftentimes the suitability standard, or the type that just is suitable for what you're trying to do, is just because they're there, basically. They're only required to recommend what's right for you at the moment. They don't really have to tell you what a good strategy is. They're more of a salesman. But of course, they don't charge as much because that's all they really do is sell you something. Before you approach a financial advisor, figure out what type of financial help you actually need. What's your goal? What do you want money for? You want investment advice. If you do, you often will expect to pay a fee or commission. So how do you open this conversation? When you first get acquainted, ease into the question. Asking about fiduciary responsibility. If they won't take that responsibility, it's because it's not their business model. If you want the advisor to be a fiduciary, which is basically a person that helps you in understanding, ask this advisor to put in writing that their fiduciary responsibility. That agreement can be in the form of a basic contract, or it can be a separate letter. If the advisor agrees to a fiduciary responsibility, you can ask about the fee structure, any commissions the advisor might get